Welcome to Wealthy and Wise with Kerry Sainsbury. This is where we uncover the secrets to financial success and personal growth. I'm Kerry Sainsbury, your host on this journey to mastering wealth and wisdom. Each episode, we'll dive deep into practical tips, insightful discussions, and inspiring stories from experts and thought leaders. Get ready to transform your mindset, elevate your financial IQ, and live a life of abundance. Let's dive in. Hello, everyone. Welcome back to Wealthy and Wise with Kerry Sainsbury. So lovely to have you on here and listening. We have a special guest today that I can't wait to introduce to you. We have David Clegg here from Astute Property Network, who I'm super excited to talk to and ask lots of questions. David, thank you for coming on. Thank you for joining the show.
Thank you for inviting me, Kerry. Hope we can answer all your questions for you.
I hope so. I'm sure you will. I've known you for many years now, right? In the industry. I'm not sure how long it is. That's maybe 9-10 years, would you say?
I was going to say, be close to double figures.
Yeah, there you go.
Since we're very young, obviously.
Yeah, obviously.
We started very young, yeah.
Started super young in the industry.
Absolutely. Straight out of school.
Or tell me a bit about yourself, sort of, how you've sort of got into the industry you are in now and sort of your journey as to where you've come from.
Yep. So my background since, I guess, the early 90s has been involved in financial planning and property investment. I used to work in social security. And one of my jobs was looking, all pension inquiries. A number of people I talked to, they would say, no, we don't have shares or property or superannuation because you want to qualify for a pension. But I thought, well, that's not the way to look at it. You need to be looking at getting something for retirement. So that led me down the track of helping people with financial planning and property. I've been with Astute Property Network now for, I think, 6 years. Astute's been running 8 years as buyers agents, helping investors to find suitable properties for their needs.
That's fantastic. And definitely, we haven't sort of covered property in this podcast as yet. So I'm super excited to sort of understand, I guess, from you, those analytics behind the property markets and what we can do, I guess, to learn and to grow our portfolios. So your role is a buyer's agent, right? Can you tell me a little bit about sort of your role?
Yep. What you do? So my role is dealing with people in the business. We have buyer's agents and also acquisition manager. So basically, a buyer's agent would be similar to a mortgage broker, where someone will go to a mortgage broker to help them find the best loan at the best banks or lenders, work through all that and come back and make suggestions. That's what we do for investment properties. We look to where the best place for people to invest based obviously on how much they want to borrow, how much they can afford to pay, what's happening in the market. So we specialize in investment properties. And interesting, there's a few different types of buyer's agents. Some specialize in owner-occupied, some in only specific areas. So they might be experts in, for argument's sake, Brisbane, but don't really know a lot about other areas. Then you have people like us, borderless buyer's agents, that we have connections and contacts everywhere around Australia. So we can source investment properties for clients anywhere that works for them in Australia.
Right. Okay. And that would give more an advantage, would you say, because you have sort of the data behind that?
Yeah. So because of all our connections, 89% of the properties that we find for our clients are off market. So what that means is before they go on to any online platform or anything like that, we've got the first opportunity to purchase them on behalf of our clients, which gives them all a head start. And also importantly, most of us know our own area and what's happening, but it's not necessarily the best place to be investing at that time. It's, the markets all around Australia, there's markets inside markets. So it's important to understand what markets are performing, but most importantly, why they're performing the way they are. what type of property, what type of asset, and where, based on the numbers. And a lot of the clients we find just don't have enough time. They're all busy with work and kids and life and all that type of thing to be able to do that research all around Australia and all different types of areas inside those capital cities.
And I guess we can become, like, I guess if we're looking at investment property, we can become, I guess, quite emotionally attached to areas, right? Without sort of looking
Correct. Yep.
further.
And it's when we say, look, you don't buy if somebody's a terrible dog box, it's not going to grow anyway. But it's not necessarily a property that you're going to live in, but it has to be a property that you can see that people will live in and will want to buy it off you in the future. Because at the end of the day, that's when you make your money, when you sell the property and realize your capital gain.
Yeah, so many little moving parts, right, to also consider.
Yes.
Now, I've heard you talk about this particular cycle, and I definitely wanted to ask this. So I hear that I hear you talk about this 18-year cycle.
Yep.
Can you explain the cycle pattern? Super interesting.
Sure. So we looked at research back over the last couple of 100 years, and property tends to go from its bottom back down to the bottom, on average 18.6 years. So if we go back in the last couple of cycles, 1990, we had the recession we had to have. Fast forward, the GFC was at the end of 2008, so 18 years later. So what happens, you have a couple of stages of the cycle. So I guess human psyche being what it is, when it gets to the bottom and prices are low, people say, let's buy in now. You generally have a run for about 6 or 7 years where you get some good capital growth. Then you have a mid-cycle downturn or slump. So if we think back to, say, 2018 and 19, people remember the Sydney and Melbourne property markets came off between 14 and 19%. And then since 2019, we've had a very good run. So you then have a second burst, I guess, of growth, then flattens out, steadies, goes down a little bit, and the whole cycle starts again. So generally, it's been 18.6 years over the last 200 years, using data from Australia, England, and America. So it's interesting to know where we are in the cycle, because within that cycle, and I won't go into too much detail because we're running out of time, but inside that cycle, certain areas perform better at different stages of the cycle. So generally, the first stages tend to be Sydney and Melbourne that get dragged along. Towards the end of that, there can be fringe areas. So it could be an area like Central Coast or Wollongong or Geelong that are in close access to the city. They can't afford to be that close to the city, but within an hour, they can buy there. So it's very important to know where we are in the cycle and what type of areas will be performing best.
And does that depend on the state? Like, for example, would Melbourne start moving first and then go down to Sydney and Queensland, like those smaller sort of areas that have less people in them? Like, is that how it works as well?
So generally it's Sydney and Melbourne in the first leg, and then the second legs, it's the Brisbanes, the Perths, the Adelaides, the Canberras, the Hobarts that tend to move. As it goes up, it gets out of the reach of the average Australian to invest in. So then they look at where is value for money? And it does. And unfortunately, if you listen to the media, they only ever talk about generally Sydney and Melbourne markets, whereas they should be looking at the overall markets of what's happening and why it's happening.
Yeah. And you see, like, I live 45 kilometers out of Brisbane, and the area is just there's so much more development. And then all of a sudden, I had my house, I think it was 2007, I built it, and I was waiting. And then all of a sudden it just boomed.
Correct. And
years. And also the growth now, like the traffic is a nightmare. Like we're in
that's the downside of the growth.
Yeah.
That's where working from home can be a benefit. You will also now, Brisbane's actually gone past Melbourne as the second most expensive city in Australia.
Brisbane?
Yes.
Wow.
Which hasn't happened since early 2000s when it was more expensive than Melbourne.
Would that be because of sort of all the movement as well from like in COVID, a lot of people have moved up as well.
There is a lot. One of
Yeah.
the things we look at is immigration. So you've got the overseas immigration, which everyone knows about. But if you look at the internal migration, Queensland had a plus 21,000 people with net interstate migration. The only other positive one was WA at 1,500. All the others were minus or just about breaking even. So as you say, people moving for, and we'll use Brisbane as an example because we're talking about that, moving there because they could get a more affordable property. It's a very good spot to be in winter. It's quite nice, quite warm there, warm in Brisbane in winter, not too cold. So it definitely is lifestyle and job opportunities because there's lots of infrastructure expenditure going on in southeast Queensland, as there is, look, in Sydney and Melbourne as well. But yeah, quite often it's a lure of the better bang for your buck in the property side of things and the lifestyle.
Yeah, that makes a lot of sense. In regards to the building and the construction issues that we hear a lot about, what are your thoughts on that?
It's a bit of a catch-22 because the charts show that what we need to get built and what is actually getting built won't catch up till 2028 or 2029. And that's a couple of reasons. Again, as I said before, we've got a lot of immigration into Australia, but also at the when COVID was COVID was here at its highest points. What the government decided to do was to offer a grant called Home Build to encourage people to keep building properties because the building industry is a very big employer of people in Australia. So they didn't want that to slow down. So in 2018 and then 2019, the Agricultural Board worked out there'd be just under 50,000 houses built. So they sent a lot of wood offshore as an export industry. Then the government announced the Home Fund, the Home Build. So they thought they'd have 42,000 applications, which was to build a brand new home or to have 150,000 worth of renovations. They actually had 132,000 applications. So we sent all the timber we needed to offshore. Then 2019, Christmas time, remember the big bushfires down southern New South Wales, which wiped out just under a quarter of all the woods available. So you had lack of supply of timber and massive amounts of people wanting to build homes, which led to a massive shortfall in supply, shortfall in trade because we closed the borders and couldn't bring people in to work, and a premium price on land because all these people, the 130,000 that came in, all needed land to build on. Land was taking forever to get approved because it was all clogged up in council and site works and all that type of thing. To a stage now, I say we're still well below the properties that we need to have, which is bad because we do need to get those properties built to house everybody. So the consequence is that the markets have been holding up in the higher interest rates because of supply and demand, and also leading to the fact that the rental market is so tight. There's what's called equilibrium in rental market is 3.3% vacancy factor, because that means that basically there's enough properties there for everyone to rent. Currently, it's running at 1.2%. So there's a massive. We all know people who are trying to find properties to rent, and how many people turn up for open houses and things like that. So the difficulty with the construction is you may wish to buy a property, but it could well take a couple of years to come to fruition. The other risk involved in that is that over the last 12 months, 2,200 building companies have gone broke. Okay. And a lot of the money that they owe at the contractors, subbies, and things like that. So there's lots of, as I said before, big infrastructure projects. You think about, Brisbane's got the Olympics or Southeast Queensland. Sydney's got Badgeroo Creek Airport. That's going to be a long-term big employment. Victoria's got their big northeast link. So if you're one of these contracts or subbies who's lost money, are you more likely to try and find another building company or try and take on one of these long-term, safer government infrastructure jobs? So that we don't see that shortfall in building changing anytime soon, which is a pity because we need houses.
Well, as you said, like the rental market, it's
Yeah,
it's a lineup of applications.
it is. Governments are trying, different state councils and governments are trying to, I guess, price Airbnb out of the market and get those back into the market. So the
Mm.
various governments and councils are trying different things to try and get them available. But even then, that's not going to be the shortfall that we need to fully take it up to back where it's at, say, equilibrium.
And then the other issue with building, I was speaking to a friend recently, and I didn't realize the increase in terms of price just to build.
30%
Yeah,
increase.
triple. Yeah, yeah.
Yeah. And so that's also flowed on as a side effect because a lot of people now are paying a lot of money for body corporate strata fees.
Mm.
One of the reasons is the insurance replacement cost has gone up by 30%. So therefore, the amount you're paying for insurance on the building has gone up and electricity's gone up by 15%. So all these things factor in when you're looking at what to invest in are these extra costs and how do they affect the rental yield and how much you get, more importantly, how much you get in your pocket each week after the rent.
What it's going to cost you, what are you going to make? In regards to, you mentioned the body corp there, I guess you obviously suggesting that we look at the facts, but I've always sort of been told, I guess, and thought like a freehold property is sort of where you're sort of wanting to look at because that's where the equity builds faster than looking at maybe a strata, like a unit or a
Yep.
townhouse. What
Yep.
are your thoughts on that?
Look, our preference for our clients is, if we can, is to get them standalone property.
Mhm.
But the way that prices have been going, the way the interest rates have been going,
Mm.
can't necessarily get that in an area you want to buy in. So the options are you still do it, but you need to look maybe areas further afield at a regional area. Or if you get, say, a townhouse that doesn't have these big body corporates on it, because they haven't got the pools and the tennis courts, but still got a bit of land or a duplex, that would be the next good option because you've still got that bit of land and it's people are quite happy to rent in units and things like that because they don't want to, it's not their property. They don't want to spend all weekend in the garden, but
Mm.
it doesn't necessarily mean, and there is a gap in the last few years. The premium you pay for a standalone property on top of over a medium density has been increasing to a fair bit in different value in different states, but you can be paying up to 60% more for a house than for a unit.
Mm. I guess it depends on the cost, right? Again, it goes back to
Yeah,
the cost.
yeah. Look, the building costs to build a new property, as even as a unit, is very high as well.
Yeah, I can imagine the change, the world, right?
Oh, absolutely.
And
It's
it's a new world now.
Yeah, and look, it's not saying the builders or developers or anyone is greedy, but
Yeah.
you're paying a premium price for the land because there's only so much land.
Mm.
And as we said, building prices are up 30%. So you have to charge more for the build to be able to do it. Because I read a report the other day from a company called PropTrack that the number of approvals that don't go to completion now are at 17%. So nearly 1 in 5, which is historically high figures because they may have done their pre-sales at a certain price to build. When they go back to the bank and now it's 30% more, the bank says, well, it's not going to work. We can't lend you the money. So they have to stop doing those.
And a lot of people are going down the road of rent vesting. How,
Yep.
yes, please explain that to everyone.
Okay. So rent vesting is where you continue to rent where you want to live or stay at home with your parents um, and buy investment property. So recent study shows that for the average first home buyer in Australia, it takes 5 years and 10 months to save up a 20% deposit. Okay. Bank of mum and dad helping out. When it got to the peak market, probably about a year, 18 months ago, it was just on $100,000 that the bank of mum and dad had to lend to their children. So that's okay if you've got one child, you've got two or three, it certainly adds up. And 58% of parents were helping their children to get into the property market. So what more and more people are doing is choosing to rent their lifestyle and then buying investment property, because it used to be at the turn of the century, sound old saying that, don't I? The average age was 24 for the first home buyer. Now it's 34. So what people are doing are buying the property, letting it grow, and then maybe buy a second one before the 10 years is up. That gives them more cash for the home that they want when they're ready to settle down, as opposed to chasing their tail and trying to save all that money. Excuse me, sorry.
All right. Yeah, that's
lure guy floating around.
It makes sense, because it would potentially be, and obviously I'm not an accountant, but that would potentially be of an advantage for tax as well if you've got that rental income helping.
And also
market.
I think one of the things to do with that people couldn't wrap their head around is that there's a bit of a stigma about renting. But when you think about it, if we're in a crowd and we ask who here has rented at some time in their life, most people put their hand up. There's different stages in your life. When you're first starting out, or you're getting a new home built and you're renting somewhere, most people have rented at some stage in their life. So a tenant is just an everyday average person like you or I. It's not a bad thing to be renting. And to say it's going to get harder and harder to save up the deposit for the property as the prices continue to rise at a higher rate than our incomes are rising. So it's a very, very popular thing. That's why it's important that they do make sure they get the right property if their parents are going guarantor. So as soon as they've put some cash into the purchase, as the property grows, they can refinance and have the parents off the loan. Because obviously, as parents, when you get close to retirement, you don't want to have to carry that extra debt into retirement, even though kids are paying for it. You want it to be, if you can, debt-free in retirement for mortgages. So it's a very big growing area.
Very interesting. Very interesting that there's different ways around it, right? It's just purely us sort of learning and educating ourselves, and adapting to the changes.
Yeah, and I think that's why 74.1% of people in Australia now use a mortgage broker, which makes sense, because as an individual, you couldn't possibly know all the different lending institutions, treatment of income, what their rates are, what the costs are involved. So I always think it's a matter of surrounding yourself with a team, somebody who can expert in finance, expert in credit, expert in property management, tax, etc. Get yourself a team, I like to call it a hub, that you can work with to make sure that you get the best information and best advice, and make the most of it, I guess, with any applicable depreciation or building and best things like that. Don't try and necessarily do it on your own unless you've got expertise in those areas, but everyone work as a team to ensure the good successes for your investments.
That's true. And I think, like I see it all the time with my business, that clients bury their head under the sand just because we may not know that solution.
Correct. Yeah.
So we are the professionals that provide that service and education to you. So reach out.
Well, and this is the interesting one. Well, they keep focusing on the media about could be a rate rise, could be a rate rise. Banks and lenders are actually now have cut some rates for fixed home loans. So, I guess my message here is just don't listen all the time to the media.
Yeah.
Talk to experts, because I didn't see anyone in any of the news bulletins or shows or see on TV talking about the fact that there are actually been rate cuts in the last few weeks from lending institutions. It's more focusing on the headlines of will it go up or won't it go up? Because the interesting thing, when interest rates didn't go up for 4 months in a row, property prices jumped up, because people have confidence to do things when they think it's steady. So
Interesting. Well, thank you so much for coming on. Is there anything else that you'd like to add?
No, I think that's thank you for inviting me along. Sorry, my voice got a bit raspy. It's been I've had this dreaded laryngitis going around.
Oh, there are so many winter sicknesses going
I
around at the
know.
moment. I've had two, I think, this month, and it's
I know. I've lost track of what it is. Is it long COVID? Is it RSV? Is it asthma? Is it what?
and
I
there's
think it's a
gastro,
different name every week.
there's gastro going around on top of all these flus.
Oh, I know. There's everything going around. Let's get to spring and summer again.
I know. Bring that
It's
on.
not as bad.
And so anyone who would like to have a chat to you and have a discussion with you on any sort of property related matters, how would anyone listening contact you?
Probably easiest, just go to our website, www.astutepropertynetwork.com.au, and there's a box here where you can request a call and you can say, look, this is what we're interested in, be it, if you're a broker that has clients who need help, or if you're a client who's out there looking and can't find anything, or if you just want to have a chat about things in general, just, probably easiest go to the website, and is the thing to request a call. You can actually ask what time you want us to give you a call, what it's about, and then we can give you a call and have a chat.
Fantastic.
And obviously it's free of charge to have a chat to us up front.
Great. That's really good. It's really handy to know that we have this option available.
So,
thank you.
All right.
Thanks.
Enjoy the rest of the week, and I'll talk soon.
Will do.
See you later.
Thanks for joining us today on Wealthy and Wise with Kerry Sainsbury. Let's continue to grow together in wealth and wisdom. Until next time, remember to sprinkle kindness, share wisdom, and embrace every opportunity. Stay tuned and stay fabulous.